Hey, so I was looking at Trent Limited's earnings report from February 6, 2025. Seems like they had a pretty solid Q3 and 9-month period ending December 31st, 2024. What's your take on it?
Well, hello there. Yeah, Trent, the Tata Group retail arm, seems to be doing all right. Their main gig is retailing and trading merchandise, and everything else is kind of just supporting that. I mean, it's good to see they're keeping things focused, right?
Right. So let's dive into the numbers, I guess. Revenue from operations standalone is up to 4,534.71 crore rupees for the quarter ended December 31st, 2024, compared to 3,312.48 crore rupees for the same quarter last year. That's a significant jump, right?
Absolutely. And the 9-month figures tell a similar story. Revenue jumped from 8,739.63 crore rupees last year to 12,562.01 crore rupees this year. I mean, that's pretty solid growth. Actually, digging into the expenses, purchase of stock in trade also increased, but the revenue growth seems to be outpacing that, which is a good sign.
Okay. What about net profit? How did that fare?
The net profit standalone for the quarter is 469.33 crore rupees, up from 343.60 crore rupees last year. For the 9-month period, it's 1,234.92 crore rupees compared to 781.54 crore rupees. I mean, these are some pretty healthy increases. Earnings per share also went up from 9.67 rupees to 13.20 rupees.
That's great. But were there any one-time events or unusual items that might have skewed these results?
Good question. Actually, there was an exceptional item last year, a gain on reassessment of lease term under IND AS 116, which added 543.35 crore rupees to the standalone financial results. But this year, there's no such item, making the profit growth look even better organically.
Okay, that makes sense. Now, looking at the balance sheet, anything pop out in terms of assets, liabilities, or equity?
Well, the paid up debt capital is something to watch. It's listed as 2,027.08 crore rupees. The debt equity ratio is 0.36. I mean, keeping an eye on these ratios is crucial for assessing their financial health.
Right. And what about cash flow? Are they generating enough to cover their debts and, keep the business running?
Well, the debt service coverage ratio is 3.66 and the interest service coverage ratio is 17.51. Both are looking pretty healthy, suggesting they're more than capable of meeting their debt obligations. Disclaimer, we advise investors to check with certified experts before taking any investment decisions. I mean, these ratios are definitely something investors should keep an eye on.
Okay, so it seems like the standalone performance is pretty strong. What about the consolidated results? Are they painting the same picture?
Yeah, pretty much. Consolidated revenue from operations for the quarter is 4,656.56 crore rupees, up from 3,466.62 crore rupees last year. And for the 9-month period, it's 12,917.67 crore rupees compared to 9,077.41 crore rupees. I mean, similar growth trends as the standalone numbers.
And net profit?
Consolidated net profit for the quarter is 496.54 crore rupees, up from 370.64 crore rupees. The 9-month figure is 1,222.81 crore rupees versus 765.37 crore rupees. It's all pretty consistent.
So, are there any significant differences between the standalone and consolidated results that we should be aware of?
The consolidated results include the performance of Trent's subsidiaries like Booker India Limited and Fiora Business Support Services Limited, and their share of profits from associates and joint ventures. I mean, the auditor's report mentions that one subsidiary's results were reviewed by another auditor and some others weren't reviewed at all, but the management says those aren't material.
Okay, interesting. So overall, what are some key trends we're seeing in these financials?
Well, it's clear that Trent is experiencing strong revenue growth, both standalone and consolidated. Profitability is also up, and they seem to be managing their debt pretty well. It's like they've found the right recipe for success,
Yeah, it sounds like they're on a good trajectory. What's your overall assessment of Trent's financial health and outlook?
I'd say Trent is in a pretty solid position. The retail sector can be unpredictable, but they are showing consistent growth and profitability. It's like watching a well-managed sports team consistently making the playoffs.
So based on this report, would you say Trent is a good investment?
Well, it's always tricky to give investment advice, and you should always do your own research. But based on these financials, Trent seems to be performing well. The key will be to watch how they continue to manage their debt and maintain this growth momentum.
Makes sense. And I guess any final takeaways from this earnings report?
Yeah, I mean, keep an eye on their debt levels and how they manage expenses as they continue to expand. The retail game is tough, but Trent seems to have a good handle on things right now.
This has been super insightful. Thanks for breaking down this earnings report.